Welcome to our new IFRS Statutory Fund Series. It is an initiative of OJ Inspiration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards IFRS through a multiple-choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions of set 1 to which the answers have been provided on IFRS 14. This is a standard on regulatory deferral accounts. Viewers and subscribers have 30 seconds to select or choose the answer to each question. The answers to 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 1. The balance of an expense account that would not be recognized as an asset in line with other IFRS standards but that qualifies for deferral is A. Not reported in financial statements. B. An off-statement of financial position item. C. A regulatory deferral account balance. D. Deferred charge. E. A contingent asset. Time counts. Ten seconds gone. $20 seconds gone. Time up. Question number 2. In line with IFRS 4, a framework for establishing a price that can be charged to customers for goods or services, and that framework is subject to oversight and or approval by a regulator is called A. Public-private partnership initiative. B. Rate regulation. C. Concession. D. Memorandum. E. Circular. Time counts. $10 seconds gone. $20 seconds gone. Time up. Question number 3. An entity that did not recognize regulatory deferral account balances in its previous GAAP can A. Apply some of the provisions of IFRS 14. B. Apply the full provisions of IFRS 14. C. Recognize regulatory deferral account debit balances, but not the credit balances. D. Recognize regulatory deferral account credit balances, but not the debit balances. E. Not apply any of the provisions of IFRS 14. Some counts. $10 seconds gone. $20 seconds gone. Time up. Question number 4. Regulatory deferral account debit balances recognized under previous GAAP on transition to IFRS are A. Written off to retained earnings. B. Derecognized through other assets. C. Adjusted off regulatory deferral credit balances under the previous GAAP. D. Not recognized but disclosed as contingent assets. E. Still recognized for the same carrying amounts. Time counts. $10 seconds gone. $20 seconds gone. Timer. Question number 5. The total of all regulatory deferral debit balances are classified in the statement of financial position as A. Current asset. B. Deferred charge. C. Right of use asset. D. Non-current asset. E. Separate line item outside of current and non-current assets. Some counts. 10 seconds gone. 20 seconds gone. Timer. Question number 6. The total of all regulatory deferral account credit balances is classified in the statement of financial position as A, deferred revenue, B, deposit liability, C, non-current liability, D, current liability, E, separate line item outside of current and non-current liabilities. Some counts. Ten seconds gone. 20 seconds gone. Timer. Question number 7. The movements in regulatory deferral account debit balances and credit balances are presented A, separately as adjustments to retained earnings, B, net in the statement of comprehensive income, C, separately in the statement of comprehensive income, D, net as adjustment to retained earnings, E, net as adjustment to assets and liabilities of an entity. Some counts. 10 seconds gone. 20 seconds gone. Timer. Question number 8. Deferred tax movement relating to regulatory deferred account balances is presented in A, income tax expense line item in other comprehensive income, B, income tax expense arising on discontinued operation, C, income tax expense line item in profit and loss, D, regulatory deferred account balances, E, statement of changes in equity as adjustment to retained earnings. Some counts. 10 seconds gone. 20 seconds gone. Timer. Question number 9. The movement in regulatory deferral accounts arising from rate-regulated activities of a discontinued operation is presented A, in other comprehensive income, B, within the separate line item of net movement presented in profit or loss, C, as considered in arriving at profit or loss from discontinued operation, D, as part of a disposal group, E, written off the assets of the discontinued operation. Time counts. 10 seconds gone. 20 seconds gone. Timer. Question number 10. Impairment relating to regulatory deferral account debit balances that is not a cash generating unit is reported in line with A, IAS 2, B, IAS 20, C, IAS 36, D, IFRS 9, E, none of the above. Some counts. 10 seconds gone. 20 seconds gone. Timer. We proceed to review the answers. Question number 1. The answer to question number 1 is C, a regulatory deferral account balance. Regulatory deferral account balance is the balance of any expense or income account that will not be recognized as an asset or a liability in accordance with other standards, but that qualifies for deferral because it is included or expected to be included by the rate regulator in establishing the rate or rates that can be charged to customers. C is the answer to question number 1. Question number 2. The answer to question number 2 is B, rate regulation. Rate regulation is a framework for establishing the prices that can be charged to customers for goods or services, and that framework is subject to oversight and or approval by a rate regulator. B is the answer to question number 2. Question number 3. The answer to question number 3 is E, not to apply any of the provisions of IFRS 14. An entity that did not recognize regulatory deferral account balances in its previous GAAP cannot apply any of the provisions of IFRS 14. An entity is permitted to apply the requirements of IFRS 14 regulatory deferral accounts in its first IFRS financial statement if and only if it 1. Conducts rate-regulated activities, and 2. Recognize amounts that qualify as regulatory deferral account balances in its financial statements in accordance with its previous GAAP. E is the answer to question number 3. Question number 4. The answer to question number 4 is E, still recognized for the same carrying amounts. IFRS 14 permits a first-time adopter to continue to account for regulatory deferral account balances in its financial statements in accordance with its previous GAAP. On initial application of IFRS 14, an entity continues to apply its previous GAAP accounting policies for the recognition, measurement, impairment, and the recognition of regulatory deferral account balances. Therefore, regulatory deferral account debit balances recognized under previous GAAP are still recognized for the same carrying amounts on transition to IFRS. E is the answer to question number 4. Question number 5. The answer to question number 5 is E, separate line item outside of current and non-current assets. When an entity uses the current and non-current method of classification in its statement of financial position, it does not classify the total of all regulatory deferral account debit balances as current or non-current. Rather, this total is classified as a separate line item after the subtotal of current and non-current assets has been ascertained. E is the answer to question number 5. Question number 6. The answer to question number 6 is E, separate line item outside of current and non-current liabilities. When an entity uses the current and non-current method of classification in its statement of financial position, it does not classify the total of all regulatory deferred account credit balances as deferred revenue, deposit liability, current liability, or non-current liability. Instead, this total is classified as a separate line item after the subtotal of current and non-current liabilities is presented. E is the answer to question number 6. Question number 7. The answer to question number 7 is B, net in statement of comprehensive income. An entity presents as a separate line item in the other comprehensive income section of the statement of comprehensive income the net movement in all regulatory deferred account balances for the reporting period that relates to items recognized in the other comprehensive income section. The remaining net movement in all regulatory deferred account balances for the period is presented in the profit or loss section. B is the answer to question number 7. Question number 8. The answer to question number 8 is D, regulatory deferred account balances. When an entity recognizes deferred tax as a result of recognizing regulatory deferred account balances, the entity presents the resulting deferred tax and the related movement in that deferred tax with the related regulatory deferred account balances and movements in those balances instead of the deferred tax presentation provisions of IAS 12 income taxes. D is the answer to question number 8. Question number 9. The answer to question number 9 is B, within the separate line item of net movement presented in profit or loss. IFRS 14 provides that when an entity presents a discontinued operation in line with IFRS 5 non-current assets held for sale and discontinued operations, the entity is required to present the net movement arising from related regulatory deferral account balances of that discontinued operation with that of the net movement of the regulatory deferral account balances of the continuing operations in the profit or loss. The same presentation applies to regulatory deferral account balances and net movement thereon for a disposal group. B is the answer to question number 9. Question number 10. The answer to question number 10 is E, none of the above. IFRS 14 provides that on initial application and subsequently, an entity continues to apply its previous GAAP accounting policies for the recognition, measurement, impairment, and the recognition of regulatory deferral account balances. As previous GAAP accounting policies are applicable, impairment of regulatory deferral account debit balances is treated in line with those previous GAAP accounting policies, and no IFRSs apply for the impairment reporting. However, where the regulatory deferral account debit balances are part of a cash generating unit, CGU, IAS 36 impairment of assets apply for the purpose of impairment test for the CGU. The full provisions of IAS 36 apply to any impairment loss arising thereon. E is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IFRS 14, Regulatory Deferral Accounts. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for OJ Inspiration Limited. Thank you once again, and bye for now.